Okay, everyone, we gave everybody enough time. I wanted to say hello and welcome you to getting to know Noni. So, welcome to everybody. We have an incredible showing today. I can see people are still logging on, but we're going to go ahead and get started. I'm so excited to see so many brokers and bankers attend our Getting to Know Noni. I promise, I know you guys are busy originating and taking that time to learn a new product or to train. You're not sure you should take that time. I promise you there's so much value in the Noni product that it will be well worth your time. I also noticed that we've got some competitors that have logged on, and we welcome the competition. I'm hoping there's a lot of account executives that will love our training and will come join us. So there'll be details at the end of this PowerPoint with contact information. So you can contact us. We pay our AEs well, and obviously we have incredible products to bring to the table. So good morning, everybody. Today we will learn what is Noni like and what does she not like. We will start with just a little bio on myself. I am Elizabeth. In the business, a lot of people call me Liz or Lizzie. I've been in the non-QM space dating back to the 90s. My specialty has always been, my strengths have always been to come alongside AEs and brokers and teach them on how to think out of the box and fund more non-QM loans. In the last 4 years, I have built 2 traditional agency and government wholesale platforms to think of, let's do some non-QM business. So I've come alongside and built some ops and underwriting teams, and also come alongside the AEs and brokers and taught them how to fund non-QM loans, and just learned, it's been over a decade, some common sense out of the box lending for the underserved. So today it'll be all about that. It'll be bringing a product to that self-employed and real estate investor. The Noni has been long awaited. So getting to know Noni, let's get started. So Brian Filkey was kind enough to do our first training on the Noni, and he gave us some incredible stats so that you understand that this product will be well received and that there is a ton of non-owner occupied individuals in this country. So Noni, what is it? It's a non-owner, no-income product, right? I like to think of Noni as a super rich Nona who spoils her kids with lots of gifts, right? So Noni's gift to us is the creation of a much needed simplified, and that's the key factor, guys, simplified DSCR product with higher LTVs and low rates. So since we're talking about what Noni likes, I want to start with her first and foremost love, and that's brokers and their business. So this product was created with the broker in mind. And I just want to give kudos to our capital markets secondary guy, Brian Filkey, who creates proprietary products for us with the broker in mind, ease of use, and ease of sale. Because we can have a lot of products out there, guys, but if the borrower won't accept it, the consumer won't accept it, then you could be the best salesman on the planet, but you can't sell something that's not accepted by the front line. So I'm excited to say that our ownership are all producing wholesale reps that everyone knows in the business. I love to see them on a daily basis, working hard to provide a better platform and better products for our AEs and our brokers. So what was the Noni designed to do? It's for 1 to 4 unit commercial business purpose loans. So no income, no employment collected on that loan application. So excited you don't have to wait for transcripts, right? Sucks so bad to have a loan and you can't fund it because you're waiting on a wholesale platform, some lender that forgot to order your transcripts. So no 4506Ts, no W-2s, no tax returns. Qualification is simply based on property cash flow. What does that mean? Rents. We qualify on rents, right? So rental income, where does that come from? It's taken from an existing lease or a rent survey, a 1007. So all those appraisals will have to have a 1007. And we just compare it to the mortgage payment. So we take that rent, divide it by the mortgage payment, and you either Noni or you don't. So we're going to try and change your frame of mind from DSCR to do you Noni at 1% or do you not? This is one of the easiest non-QM loans in the marketplace. We have closings in 15 days or less, rates starting at 5.75 And these loans will not clog your processing teams with bank statements. Does that mean I don't do bank statements here, or that we're not great at them? We're fabulous at them. We can do bank statements, but why put your non-owner investor who has a ton of properties and a ton of probably single entity business bank statement accounts and clog your processor and your mind with that? We've got a 575, no income, non-owner, no asset product for you. And the rate probably could be better than a bank statement loan. So would like to cover that. All right, so let's go through where the NONI sets us apart. So there's no pricing adjustments. And when you see my rate sheet, you are gonna love it. No pricing adjustments for cash out, for units, for interest only, for condo. Gift funds allowed. What? I haven't seen gift funds allowed on a non-owner product in years. Only 3 credit tiers, guys. So 680 and the 640 to 679, 620 to 639. 3 credit tiers, not 7, not 10. It's simple. Loan amount. So non-owner, no income to $3.5 million, cash out to $2 million. In the last 4 years, I've had some big loans, and the competition quivers at $500,000 cash out. Yet we don't care on $2 million and can go to 3.5 on a non-owner, no income. This is a win-win for you, Mr. Broker. Max LTVs to 80%. We go as low as 620 credit scores. There's more. Finance properties, no limit on finance properties, and we only have a 3-year seasoning on any housing event, foreclosure, mod, BK. Our terms are simple. We offer a 30-year fixed. Yes, we do have a 30-year fixed on this, and a 5-year interest only. We offer soft prepays, which is beautiful. So there's not really a lot of reason for a non-owner, no-income loan to have a short-term prepay, because we're giving them a 5 3/4 rate as long as they've got a 680 credit score, right? So a soft prepay comes in if that investor wants to sell that property. So pay attention. We have a 1-year hard, 2-year soft prepay at a quarter add, and I'll show you that on the rate sheet. No reserves required, guys, right? And we're qualifying off DSCR at 1%. Okay, so are all cash flow programs created equal? I love this slide because it kind of goes through what the difference is between us and the competition, right? Ease of qualification is what you need to pay attention to, Mr. Broker. You're going to have a lot of AEs that walk through your door and they quote you rates and they quote you LTVs, but does your borrower qualify for that? So I think the nice thing about NONI is that we qualify off start rate, not a fully indexed rate like others do. A fully indexed rate today with margins at 5% and a 12-month index in the high 2s could mean that you have to qualify off a 7 or 8% rate to qualify for that. So is that rate real at pre-qual status? That's what I want you to look at. So we have higher loan amounts. Okay, we accept a 1% DSCR where others ask for 1.15. Our loan amounts are 3.5. Our competition could be at 2. We offer IO, right? 10-year IO, 30-year fixed available. I wish I would have had this product back in the day. Max cash out $2 million. Some people are capped at half if they'll even do that. Unleased properties, pay attention, guys. You are going to have vacant properties that are being rehabbed for whatever reason, okay, on refis that are going to be capped at 70 with the competition and will be at 75. So here's a great example. I want to get your juices flowing. I want you to get excited. Here's an example of a NONI deal that we funded last month. $384,000 loan amount, LTV is 80%. Yes, that means non-owner, no income, 20 down at a 5.75 interest rate, interest only. The commission on this baby was $9,600. It closed in 15 days. That's a small loan amount to almost make 10 grand. What's beautiful is you did that and you put your borrower in a great rate with a long term versus a hard money loan, and it closed in 15 days. Another example of a NONI funding, I love this one. Ryan Mercier funded this one. It was a loan amount of $1.4 million. LTV was 75%. It was a cash out for units. When have we seen a cash out for units, no income, no assets, at a 5 3/4 rate, right? 5-year ARM, interest only. The commission was $14,000. I wonder if the competition did that loan, if they would have been able to do it at a 75 LTV cash out for units at that rate. They probably would have declined the loan because they would have qualified off fully indexed rate. Cash out on this deal was $224,000. All right, so let's take a look at some of the tools that we are going to offer. So we've created this NONI calculator so that you can feel confident when you're quoting your clients at pre-qualification stages that they really do qualify for that rate in the 5s. So here's a snapshot of our NONI calculator, which is very easy to use. If you look at the far left, you're going to enter the rate that you're going to get from your AE or looking at our simple rate sheet, which you'll learn to use today because it's that easy. You're going to enter fixed or ARM, and keep in mind, if you go into a fixed product, your payment's not going to qualify off IO, like your DSCR is not qualifying off IO. Enter your IO term if you choose to go interest only. Enter your loan amount, enter your taxes, enter your insurance. I just gave you a calculator that tells you what rent that property needs to bring in to NONI to cover that DSCR at 1%. Please pay attention, guys. So fully indexed is what a lot of our competition has out there, right? So a fully indexed mortgage payment would be $5,000. That would mean that if they were on a one-on-one, which they're probably at 115, you would have to have rents of $5,000. That's not easy unless you're an Airbnb or VRBO. So pay attention. Note rate would be if you had a 30-year fix, start rate is $3,500. Look at ITIA. For those of you that don't know what that means, that's an interest only, right, payment. Taxes and insurance. The A is for association, if any. Notice how all of a sudden that ITIA payment with the NONI is at $3,000. That means that to cover DSCR to NONI at 1%, your rental needs to be $3,041. So that's what's so beautiful. So this calculator will be available to you. You can email your account executive or email us after this call and we'll get it out to you. All right, so I wanted to teach you how to NONI with the calculator because all of you guys are brainiacs and you're thinking, all right, how does this work? So I want to give you an example. We have a $1.5 million 4-unit purchase with 20 down. Let's say that it's a coastal property. I'm here in California. We'll say my little city, San Clemente. Rents are $8,000. That means $2,000 per door. Not tough to do. Say it's 2 bedrooms each. With a 599 rate, and you may ask, well, Liz, why didn't you give them 575? This investor specifically asked to stay fluid. He wanted a 1-year hard, 2-year soft, meaning he could sell after the 12th month. So we offered him a 599 rate, right, with an interest only, 1-year hard prepaid, 2-year soft. Take a look at that. All he had to do was come up with an interest only qualification for $7,882 was his mortgage payment, and his rents were $2,000 per unit. So he met that DSCR, and yes, the 599 is a real rate, and the borrower did qualify for that on a purchase 20 down. Here's another example of a large loan that qualifies, because a lot of people say to me, well, I think you NONI, but only on small loan amounts. I beg to differ. So on a cash out refi on a $2 million loan, right, the borrower owed $600,000 and he cashed out $400,000 to go buy more real estate. People say, well, Liz, you know, how are you going to qualify if your ITIA needs $6,600? Where are you going to get those rents? Well, we live in a whole new world today. We have a lot of investors at Airbnb and VRBO, and we'll get into that, but we do a ton of that. This borrower rented his place out $500 a night. All we need is a 12-month history. All right, so what's top of mind at the lender? What are we all about? So we're constantly thinking of our brokers, a product that sells, quick and easy closings, right? So that's what we're about. So I put down 5 different notes of the golden opportunity that you have. So we'll go through them quickly. So for over a decade, all the real estate investors who had hard money and private money to go to. We have enormous amounts of equity built since the collapse. And I believe that the NONI is that long-awaited solution for the real estate investor that has been underserved for over a decade, paying high interest rates and points. So I want you to pay attention. In the US, 1 out of every 4 properties is a non-owner property, right? 1 to 4 units. In California, nearly 1 out of 2 properties will be rented out. There's $6 million non-owner, there's 6 million non-owner units in just California. So why do I bring these stats up? Because I think they're important. So let's get into, Brian Filke created this and he gave us some numbers, and I won't go through the whole thing, but I want to talk about opportunity. So my guys and I are dialing every day and calling our brokers to introduce them to this incredible opportunity to serve the borrowers with lower rates, but also to make a great living selling these loans. So when I call my brokers, they go, Liz, I don't do non-owners. You know, you got the wrong guy. I do agency, I do government, I only do hard money. I say, I don't agree. If you fund loans, if you took some time and looked through that LOS system, you would find that there's a ton of non-owners there. So I wanted to go through these stats. I think a lot of you are probably sports fans, so I want to give you an analogy. Some of you are sports fans, you love stats, and you love betting on your favorite teams and athletes, right? So how about you study these statistics and convert to selling some NONI? Look at these non-owners. I think the odds are better than going to Vegas. A lot better than going to Vegas. Give it 60 days, I promise, dial for dollars, and you will find yourself making a lot of money. All right, guys, so again, ease of use. A rate sheet designed with you in mind. Management, our owners, Brian, created a rate sheet that looks nothing like the competition. You guys can make up to 5 points on these deals. On average, most people charge 1 point to 2, 2.5. You can charge up to 5. I want to make sure that you look at our rate sheet. It's simple. Loan amount, reserves, 3 tiers of FICO, your rates. We do pay LPC, guys, but we don't pay 2 to 3%. This is basically a program that is borrower paid comp, or we do pay 1 point LPC. Okay, you add 50 bits to rate and you get 1 back. So we will get this rate sheet out to you today. All right, so let's get into how do you fish for this business? So let's start with low-hanging fruit. How about we start with home? How about we start with your CRM and your LOS system? So some of you will go, Liz, I don't have time, please. I say you can't be too busy. You saw the commissions, you saw the deals funding in 15 days, and we're going to bring those timelines even down to 10 days or less. So I think you could hire, here's some ideas. Hire an inexpensive hourly college student to dial for dollars, right? College kids need work right now. You could have them search through your database, give them a script, and let's just get somebody on the phones. Let's start talking to all of these people that are in either hard money loans or looking to buy non-owner properties with 20 down at 575, and they just don't want to file tax returns and pay taxes. This is our first marketing idea. Our second is Noni loves realtors. So I'll tell you a quick story. When the mortgage industry collapsed, for me it was early 2007. I was one of the first companies to go down. I worked for a subprime company. I became a retail self-gen loan officer. So I didn't know what self-gen meant. I asked my boss, what's self-gen? And my boss quickly communicated, we don't provide leads. You've got to go find them. So all I ever did was fish for brokers. So I used my business development skills to go out to the real estate community. So I speak to this because I have been on the front lines, and I want to say that I actually had a small marketing desk at a real estate office. And every Tuesday, I got to speak for 15 minutes. But guess what? 5 other lenders got to speak before me. And so I had to get creative. Like, you know, what kind of shiny toys can I bring to this party and get these people interested? So I decided to teach them in the midst of the collapse how to use hard money to make their real estate investors rich. And I'm talking rich because they were buying assets for cents on the dollar. So I taught these realtors to start thinking that they could close a lot more purchases. People could do some cash out refis and go buy more real estate. So I taught them how to use hard money and taught them something different than the competition was doing. Because all I had was agency and government. My rates weren't the most competitive. So I ventured out to sell something different and teach the realtors of the benefits of these hard money products. So anyone could suggest for you to go work with a realtor, right? You're like, great, that's great, Liz. But what I want to say to you is we want to bring value too. So I want to suggest it, but I also want to create the white labeled flyers for you, right? So you can go out to them. I want to tell you to set up some appointments and offer your realtors seminars on how to close more sales. I love doing webinars. I love speaking in front of realtors. So theLender's offering you an opportunity that when you have an office of realtors and you'd like us to do a webinar for you, we will gladly do that. So put a lunch and learn together and set something up on our calendar so that we can help you drive this business. Realtors are amazing soldiers, and remember, they're hungry for these sales and these commissions. All right, what's another suggestion? We live in a new world. What has technology brought us? Airbnb and VRBO and some really cool reality shows, right? So I think Airbnb has changed the game. People understand that they could buy a piece of real estate and actually in a season, in a vacation season, have that mortgage paid for the entire year because they can rent that property on a nightly, weekly, or monthly rate, which is much higher than a one-year lease, right? So beautiful opportunity. I suggest that you guys go out to realtors that you know are doing this business. A lot of our competition doesn't like VRBO and Airbnb, and some do, but are they going to do it at 20 down 4 units? And what I want you to keep in mind is that when the Airbnb and VRBO is purchased, I have to use the 1007 rate to qualify. But once that asset is purchased for refis, all I ask is for a 12-month look-back period from, say, a homeaway.com. Because a lot of these Airbnb and VRBO guys, they're sharp. They don't spend a lot of money on property management. They do their own, and they use these websites. So great opportunity, guys. Airbnb, do not forget it in VRBO. It's a new world. All right, so Noni also loves hard money takeout. I believe Noni was designed to do that. And I want you to remember that I say a lot of hard money, so don't confuse me with fix and flip money. Like, I can't do that asset that's got the roof missing or water damage or safety and health issues. Like, none of that I can do. You can have that secured by hard money, and one day out, I can take it out. But I think you should really think about who do you know in a hard money loan. Most of us that did retail for over a decade had to do some hard money business. Go into that LOS system and look at your pipeline. Call your friends at hard money lenders. They like points and they like short-term lending. So they'd love for you to pay them off and they can go relend their money out, right? Let's get those deals off the books. And here's a huge tip for you. Our Noni, she doesn't require any seasoning. So you could have the hard money guys secure the purchase because they needed to move faster than maybe our 15-day loan. They had to close in 2 days or 5 days, same as cash. Just come back to us and we'll return their funds. We'll do like a delayed financing. We have no seasoning. So I want you to keep that in mind. Hit up those real estate investor meetings with your own branded Noni flyers. If you have ideas on flyers that you'd like, get in contact with your AE. If you don't have an AE, you need to have one by end of the day so you can start doing this Noni product. All right, guys, so we got into stats. We're talking about hard money. Let's talk a little bit further. What does hard money look like for those of you that go, well, I've never done hard money. I have no idea what you're talking about, Liz. It's all short-term money, $1 million to $10 million loan amounts. But if you look at all those rates in this matrices, you will find that most of those rates are hovering in the 7s to 8s. And gosh, I've seen double digits still, believe it or not. So, and it's all short-term money, right? 6 months, 12 months, 24 months, 36 months at 7.99, 8.5. This is your opportunity to go in and rate and term or teach them how to purchase with Noni money for those that can hold on to that asset for a year before selling it off. And I did a ton of development money in LA with huge groups, and they hold their properties 18 months to 2 years because they do big development. Okay, another suggestion. Noni likes foreign nationals. So really, Noni, non-owner, no income, foreign national, that's beautiful. So I want to make sure that you're well aware it's not your $3.5 million loan amount. It's capped at $1 million. Got a broker out of Florida who's telling me $1 million at 65 LTV, Liz, at 575. That's beautiful. I have a ton of that. So excited to bring foreign national. I'm not saying that's going to be the majority of your business, but I'm giving you ideas on what to do with Noni. All right, the Noni Toolbox is going to be a submission checklist that will help you and your processors package the deal. The Noni Calculator, don't be in the dark. Know if you Noni or not, right? So we're going to change that verbiage from DSCR to do you Noni at 1% or less than 1%. Your account executive will email you that Noni Toolbox. Just reach out to them. All right, so I told you all the things Noni loves. There's one thing she doesn't like. Don't send us primary residence loans. Most of you are very seasoned. You've had a career in mortgage. You can look at a 1003. You can talk to a borrower in a second, and you know if that's an owner-occupied transaction that's going to come to be. We cannot violate ATR. And I am a kid that knows what it's like to wake up in 2007 and my funding source is gone. Let's protect our funding sources. When was the last time we saw a no-income, non-owner, $3.5 million loan amounts at 575? Let's protect it. If you have a primary, this won't be the home for it. I like to say, Noni, don't play that. I got that from my sales boys in the back. All right, guys, one more thing. First-time investors, take a look at what that means. So if they've owned something in the last 3 years for at least 12 months, then they're not a first-time investor. I give you a lot of grace there. You know, they could have taken a break and went, you know, out of the country for a few years. They're still not going to be considered a first-time investor. We will reduce 5% if they don't meet that, okay? And they do have to have 0 times 30. My product allows 1 times 30 for seasoned investors, but if somebody hasn't owned in the last 3 years for 12 months, then 0 times 30 is required. Again, reverse occupancy issues will happen with a first-time home buyer. We don't allow first-time home buyers on this product. All right, guys, so you've got your one-stop shop for all things Noni. I'd love for you to take a look at this website. You will find Brian Filkey's first phase of Noni training, so please take a look at that. And again, we are hiring, so if there's AEs on this call, you know, Mike McCarthy and I would be ecstatic to talk to you and help you build your career with some great products, great ownership and management. All right, guys, so I am going to offer the ability to ask some questions here because we are running out of time, but I'm going to go over 5 minutes. So I'm going to ask some questions here. I'm actually going to answer some questions, not ask questions. So if somebody wants to list up their questions here, that'd be awesome, and I'll start to answer. All right, so question 1. Somebody just closed a hard money purchase last week for one of their clients. They want to know if they could do a rate and term immediately, and it closed like 15, 20 days ago. Yes, we can do that loan. Again, we have no seasoning requirements, so pay attention to this. We'll allow using new value if they bought that property under market, right? Up to 20%. That's it. So we'll use new value, 20% increase. So that's beautiful. If it's over 20% increase, we'll still consider it, but the appraiser has to document the improvements so we can get to that new value. And obviously there could be a condition for improvements to be evidenced. So question number 2, do you offer no prepayment penalties? No. We offer a 3-year hard prepay or a 1-year hard, 2-year soft, meaning that after 1 year they could sell. My question to you is, why would you need to refi if you have a 5 3/4 rate? Investors don't like to pay taxes, so I don't see them filing taxes anytime soon. So, okay. Question 3. I have a borrower who owns several free and clear assets and wants to cash out to buy more real estate. Is cashing out $1 million too much? Nope, we go to $2 million. So beautiful product. Again, non-owner, no income, no assets, and we allow $2 million in cash out. Looks like I got 2 more questions. So what do you use to evidence rents on this product? So all of our loans require an appraisal with a 1007 rent survey to evidence the rents. If you happen to have a lease agreement where your rents are higher, like it's corporate leasing or things like that, or it's Airbnb, we would just need proof. So either rents for 2 months, Airbnb, I need a 12-month printout history from some kind of website or a property manager. Okay. And if the property is vacant, and I don't mean on purchases, guys, we're not going to hit you 5% LTV for a vacant property on a purchase, only for refis. If a property is vacant, we're going to reduce you 5%. Okay, so I want to make sure you know that. So on a refi, we're capped at 80. If it happens to be vacant because, you know, they don't have a tenant in there, it'd be nice if they got one quickly, we'd reduce 5%. And that is it for questions. If there are any questions I haven't answered as of yet, I commit to getting back to you personally via email in the next 24 hours and answering your questions. Guys, if you don't have an AE, please reach out to us and let us know, and we will assign one. I truly appreciate and value your time. The NONI was absolutely created to simplify the non-QM sector. What I do want you to keep in mind is NONI is our top product, our top funding product, but we are a non-QM lender. We do full doc, we do 1 year, 2 year, and we absolutely do bank statement loans and are great at it. We have a bank statement early review team. So thank you for thinking of us with the NONI and filling your pipeline with quick and easy fundings, but I also want you to know that we are an all-encompassing company. So thank you for your time today, and I wish you guys a fabulous day. Thank you.